Hello viewers, we'll be going over natural gas. In this video, we'll be going over my trade idea of the week and how I developed that idea. So let's start off with the technical analysis. We're currently down 4.7% on the 1 hour chart. We are at oversold RSI and we have now reached to negative MACD. If we extend that further onto the 4 hour chart, we approach to negative MACD as well and we are off of overbought RSI. If we extend that further onto the daily chart, what we have now is we're still see no signs of a divergence on the daily MACD. So the next possible support will be around the 9-day moving average, this blue line, and we are also quite near overbought RSI on the daily chart. So for the trade idea of the week, I'll be trading UNG, and for my position size on a long position will be less than 1% of my portfolio. So my entry for UNG will be around $11.78. That is around the 9-day moving average right at this level. And my sell target for my long position is $13.32 and my stop loss is $11.31. On the other hand, if I were to open a short position for UNG, my short entry will be $13.84. That is around the range right here where we encountered previous resistance that dated back to May 6th. And my sell target for my short position will be $12.30 and my stop loss will be $14.39. So how did I develop these trade ideas? The range, the bullish ratio, and bearish ratio come from the day-by-day probability model right here. And as we progress to the 5th day or a week of trading, we have a 38% chance for natural gas to climb higher between 0 to 8%, and on the extreme case, a 12% chance for it to climb between 8% to 16%. And to the downside, we have a 37% chance for it to fall between 0 to negative 8%, and on the extreme case, to the downside, a 12% chance for it to fall between negative 8% to negative 16%. These models are available in the link below. And which one of these models we should use as a reference? Let's examine the line graph right here. So the blue lines are current trend and the line overlapping it happens to be the best match. So right here we have our current trend and the trend below is the one that we found on the line graph above. This trend dates back to December 23rd, 2013 to February 6, 2014. So let's begin comparing both of the trends. So on the current trend we have 1, 2, 3 points. And on the trend in question, we also have 1, 2, 3 points. So there's reason to believe if the trends and patterns are somewhat the same, the outcome and forecast should be fairly the same. So the model, again, that we just examined was back in December 23rd to February 6, 2014, from 2013 to 2014. So we have 1 day out, 2 days out, 3 days out, and 5 days out. That will be a week of trading. So the model back then forecasted or moved up around 1.2% back in 2013 to 2014. That coincides with this standard deviation right here. Back then, natural gas climbed around, had a 38% chance to climb between 0 to 8% higher. If we examine closer on the technical performance of each trend, so what we have here is on the current trend right here, and we compare it to the trend that we just found, and that is here as well. And back then it was down 8% from monthly high. Compare that to the current trend, down 4% from monthly high. And back then it was up 20% from monthly low. Compare that to current trend, up 22%. And back then it was down 14 basis points from 10 simple moving average. Compare that to the current trend, up 2.4%. And for the 20-day moving average, it was up 8% from there. Compare that to the current trend, up 10% from 20-day moving average. We don't have the 50-day moving average because we're only examining a 30-day trend. The only difference or technical difference among the two trends is the 10 moving average, so do keep that in mind. These models are available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.